Welcome along to the Adair Academy in conversation with, and a big shout out to all our listeners on the Actors Toolkit podcast. Today, we're talking about something a little bit different. So today we are talking finances, actors' finances in particular, obviously. And today we are joined by the lovely John from Alexander & Co, the accountants. How are you doing, John?
I'm very well, thank you.
Good stuff. Good stuff. Well, first of all, do you want to tell us a little bit about you and your firm, Alexander & Co, and the services that you provide?
Sure. So, as you alluded to, I'm an accountant, working in accountancy practice. We are an independent firm in Manchester. Been around since 1976. I have been alive since 1976, but wasn't working in the firm. And we deal with it's not being particularly serviced entrepreneurs of all kinds. So businesses, individuals, sole traders, large corporates, and falling into that are actors who are, whether they consider themselves or not, entrepreneurs, as they are making a living through their own skills and talents.
Yes, perfect, excellent. Okay, and you're equity approved, the firm as well. We are
yes.
Recommended by Equity. For those that don't know, the Actors Trade Union. So, if I was a recent graduate from drama school, when do I need to register as self-employed?
As soon as you start being self-employed. So, just some of the basics around that. You are, as a self-employed person, taxed in the UK based on the tax year. The tax year, for very bizarre historical reasons, runs from the 6th of April one year to the 5th of April the next year. Okay. And during that period, you'll have your income and your earnings. And at the end of that year, when that tax year closes off, you will be required to file a tax return if you've been self-employed and have self-employed income by the 31st of January following. So we've just finished what we refer to as the 2022-23 tax year, which ended on the 5th of April 2023. And the tax returns for that period will be due by the 31st of January 2024. So if you're a self-employed actor, you've not registered for what's called self-assessment, you go online, you just Google register for self-assessment. It will give you a link. You get yourself set up with a particular tax reference the government sends you, and then you're all good to go to start filing the tax returns before the 31st of January deadline. Okay,
awesome. I read somewhere that you're allowed to earn up to £1,000 before you need to pay tax.
There is. It's referred to as sort of hobby income. So if what you're doing doesn't take you above the £1,000 mark, you're self-employed otherwise, you wouldn't need to, in those circumstances, register for tax. That's fine.
Got you. Excellent.
And that's £1,000 of income, not after your expenses.
Right. Okay.
Right. Yeah. So you can't deduct all the cost you've got. You basically, if it's £1,000 of income, you're fine. Above that, you need to start looking at a tax return.
Excellent. Right. Okay. And what are the differences between an actor registering as a sole trader or as a limited company? Does that affect the way that they pay tax? Or
it really does. So a sole trader is run, as I said, on the tax year. So you are taxable on all your income and earnings from whatever source, acting, employment, otherwise, in the period, again, from 6th of April one year to the 5th of April the next. There's no deferral mechanism or anything you can do, just your earnings are taxable in that period. An actor working through a limited company, it's not the actor that's taxable, it's the limited company that is taxed. So what happens is basically the limited company has engaged the services of the actor, and your end user, your theatre, your film production, your TV, your commercial, they will be making the payments for those services to the limited company. The contract will be between the limited company and the end user, and it's the company that pays the tax. Now, companies are a little bit different. Companies can choose whatever year end they want. So the typical ones are usually on a quarter end, March, June, September, or December. And companies are required to do a set of statutory accounts, which need to be filed at a place called Companies House. And also they need to do their corporation tax return. Now, the corporation tax return is due 12 months after the end of the accounting period. But your tax payment is bizarrely due 9 months after the end of the accounting period. So now the rates of corporate tax are 19% if you earn less than £50,000 in profits, 25% if you earn more than £250,000 in profits, and anywhere in between it's on a sliding scale.
Right. So an actor quite new to the industry is probably best registering as a sole trader rather
I would say until you're earning more than 50 grand a year, and possibly even these days substantially more than 50 grand a year in profits, you would be better off staying as a sole trader. Now, in terms of a limited company, you're looking for an income from it in some description. So the actor in those cases would either be taking a salary, in which case they need to run a payroll, which is taxed as you go along, or they would be taking dividends from the limited company. And if they're taking dividends from a limited company, that is what is taxed on them, and they have to do a personal tax return for that as well.
Oh, yeah, right. Okay, excellent. What are the common mistakes that actors make when they're doing their tax return? What kind of mistakes do you see people making?
They don't register for tax.
Okay.
They think they are, so there's something called a personal allowance, which is a level of income which is tax-free. And that's the 12,500 rather than the £1,000 we were talking about earlier. They think they don't need to do a tax return because they've got no tax to pay. And actually you do, because you've got employment income, or you've got self-employed income rather. We'll no doubt go into this a little bit more in detail later on. They claim for a vast amount of expenses that are possibly not fully tax deductible. And the big ones, first years, this is a big one. So in your first year of paying tax, depending on your level of taxable income, in January 31st, you're meant to pay your tax for the previous year. But you also have to make a payment towards the following year. So,
I've just noticed this for the first time doing my tax return this year.
It's a bit painful because you're paying 1.5 times the tax that you think you owe. I mean, it doesn't matter on your profession. Everybody who's doing a tax return for the first time ends up in that position. So it's making sure. Another thing actors are particularly bad at is keeping the money to one side to pay the tax bill. Definitely. Well, I mean, there are so many expenses as an actor as well. You want to make sure that those are covered because, you know, it's an ending spiral. What specific things can actors claim back? You mentioned there that there are certain expenses that the actors specifically can claim back. What are those? Right. So it depends if they're in a company or not. The company and individually, the rules are slightly different. Okay. So as an individual, the rule is you can only claim the costs that are wholly, necessarily, and exclusively incurred for your business. Right? So, for example, if you live abroad, if you live away for a while and you rent a flat, you would think, okay, I'm renting that for work because I have to be near the theatre, for example. Right. Well, the revenues argument there is actually, no, you need a house. You need somewhere to live. Right? Okay, So that's not wholly for your business. It's not exclusively for your business. And it's not necessary for your business. Right, because of course, the time that you're not actually working, you're still staying in that house, Correct. Now, let's say, as an example, you've got your house and you're going to take some hotel accommodation. You're specifically taking that hotel accommodation purely because you can't get back to your house following the work that you've done. And as a result, there's a much stronger argument that it's wholly, necessarily, and exclusively incurred for your business. Right? Now, where actors and actresses find it, the border gets a little bit grey. Cosmetic treatments, hair, makeup, clothes. Obviously, you need clothes. You would get your hair done regardless. You may have a skincare routine, right? It is the costs that you are incurring that relate wholly and exclusively necessarily for your profession. So I have had some people claim teeth whitening because they wouldn't have got it otherwise. And a certain hair and makeup has been required for particular jobs. But those are the kind of costs that actors would normally be able to deduct, that most people wouldn't be able to deduct. But even then, they need to be particularly careful about how they do it. And do they need any kind of evidence to be able to claim that? You would be advised always to keep receipts. And if you were ever inquired into, you would have to be able to provide an explanation in line with why did you need it for your business?
So perhaps even a letter from the company that are employing
That
you
would be
to
very
say,
useful.
we needed
That
you
would
to
be
buy
very
this
useful.
t-shirt as their.
Yeah, it depends on the kind of tax inspector you get. Often they can be pragmatic about it. They do appreciate that they work, but they do know when people are pushing the limits.
Yeah, definitely.
Yeah.
Okay, excellent. And what benefits do actors get compared to the average self-employed person? So obviously we've touched on the fact that they can claim slightly more.
They can.
Are there any?
To be honest, not a great deal. It's tax, depending on your industry, to be honest.
Yeah.
Your average self-employed person has got the same rights and benefits as an actor. So I wouldn't say, as I say, other than some of those, the cosmetic procedures, maybe some clothing, that kind of thing. Nothing particularly is in the tax legislation for actors and performers and entertainers.
Okay, so the myth that if you were to buy a new TV in order to do research on the roles that you were to play,
that would be tricky. Because you might watch other programs.
Well, yeah, exactly.
Right?
It's not.
If you bought a laptop for your business with a monitor or a computer, that would be a bit different.
Yeah. Okay.
Yeah.
Got you. Cool. What should an actor be claiming for when working away from home?
Right. So when working away from home, depends how long you're working away from home for. Yeah. And as I said, the thing about the rented accommodation, which may actually be cheaper overall, depending on the length of time you're away.
Yeah.
And the hotel accommodation, that kind of thing. So you can claim for various amounts of away accommodation that you need if it's impossible for you to get back home. If you are regularly traveling, you can claim a mileage allowance if you're using your own car. So that is 45 pence per mile for the first 10,000 miles and 25 pence thereafter per tax year.
Okay.
And that's if you for work where it's periods of less than 2 years. So sometimes you might find an actor or an actress who's got sort of a long-term soap career. That would be deemed to be their permanent place of work, so they wouldn't be able to claim that allowance. But more jobbing actors are going to be able to find that actually they're traveling around quite a lot.
Yeah.
Other costs of travel they can incur. So, your trains, planes, automobiles, provided it is wholly exclusively necessary for your business.
Yeah.
So, and this isn't just typical to actors. I have other clients who have who go abroad to see businesses they've got over there, and they claim the airfare whilst tagging on a week in the sun.
All right.
Yeah, need to be a little bit cautious about stuff like that.
Yeah.
Certain levels of subsistence, which is basically your food and drink. So as long as that's reasonable, so your coffees, your breakfasts, your lunches, that you incur for you to subsist, evening meals, they can all be claimed. Okay. Your entertaining costs can't. So you can't pay for somebody else or that kind of thing. Those wouldn't be tax deductible. But generally, as moving around, there are tax reliefs available for the fact that you do have to move around and you do have to live and eat.
Yeah. Awesome. Yeah. Cool. Okay. What was the next question? How do you work out what you can claim for when working from home? So this is what a lot of actors with me as an agent come to me and ask this question. What percentage of my expenses, my home expenses, should I be claiming if I'm working from home most of the time?
Okay, so in working from home, there's a couple of routes you can go down. One that is, depending on the amount of time you're working from home, if the guys out there Google this, there's a flat rate allowance you can claim for various things that the revenue are agreeable to. However, if that doesn't work for you, then you can take what's called a more just and reasonable approach, right? So if you are working from home, you can take a fair proportion of your utilities based on things like the floor space you were using. You can't claim your mortgage. Generally, you could be a little bit pushy on your rent if it's working from home. But you would have to be able to demonstrate that actually this is the space I'm using. This is the cost associated to that space whilst I'm using it from a working point of view. Yeah.
Yeah.
Now, if it's their own home and they have a dedicated space, right? You need to be a little careful with that. And I wouldn't say necessarily have a fixed and dedicated space. Because the disposal of your own home is generally free from tax. unless you have got a specific part that is due related to your work.
So like a home
claim
office
the
or something
expenses
like
from it and that kind of thing.
Yeah.
So working from your own home, I'd always make sure that that particular area had a dual purpose. You have an office that other people can use. You have a particular area that is used for another function, something like that.
Got you. Right. Okay. Yeah. It's totally confusing when it comes to the working from home part, because obviously most actors can, you know, if they're doing a self-tape, for example, or rehearsing lines, they can do it pretty much anywhere in a house.
Yeah.
So it's hard to sort of claim for an office. Yes, this is one thing that we deal with, especially as an agency, a lot.
Yep.
How do you go about claiming different currencies when working abroad? So we'll get an actor who's maybe based in London who books a TV job and has to go out to Bulgaria for to shoot and then comes back. How does the sort of tax work there? Do you pay both in Bulgaria and the UK?
It depends how long you're in Bulgaria for. So generally, if you're only there for a short period of time, there may be, so there is between most countries there's something called a double taxation agreement. Okay, and that sits above the domestic legislation in each territory, right? And it takes precedence over the rules in each territory. So this is what the two governments have agreed in relation to taxation where it crosses borders. Okay, now in relation to entertainers and actors, that kind of thing, most double tax treaties have a specific clause, right? And what it generally says is that the individual is generally only taxable in the territory of residence. So in your case, you've got somebody who's gone across to Bulgaria, but is generally resident in the UK.
Yeah.
However, the territory in which they are present can withhold a tax from their earnings, right? Okay. So that may be 10%, maybe 15%, something like that. Okay.
So that would be the Bulgarian government, for example.
Exactly.
Yeah.
Yeah. And whoever's engaging them generally has to withhold that payment and pay it over, generally. Right. So your chap comes back to the UK, 15% down on his earnings, right? He puts in his UK tax return and he can claim relief for the 15% suffered.
Right, so kind of like you would for an expense, it kind of comes off the total.
Indeed. Now, he can only claim relief for the tax withheld if he's got sufficient UK income to set it off against.
Okay.
And only up to the rate of UK tax. Right. So let's say the withholding tax was 25% in Bulgaria, and your UK chap is a 20% taxpayer. He's lost 5% to Bulgaria because he'll never get relief for that additional 5%.
Right, okay.
Okay. Or he's come to the UK, he's got another source of income, or he's made a loss on something, which reduces his taxable income right down.
Yeah.
He's not going to get relief because he's got nothing to set it against.
Got you. Yeah. So it's like claiming more expenses than you do make in profit. Yeah.
Correct. Right. But most countries work that way. So wherever you're mainly resident is the place where you are taxed first. And any taxes taken away from you on that journey are generally relieved in the territory where you're mainly resident.
Got you. Yeah. Any productions that we've worked on, the production company has provided the form that you need to fill out in order to claim that back. But if that wasn't provided, how would you go about claiming that tax?
It would be just very much so. In the UK, in terms of reclaiming the withholding tax, you would do it through your tax return each year.
Tax return, yeah.
Yeah. If there is a local territory way in which you can reclaim it, it is down to the laws in that particular country. So they would have to look into that before maybe setting out, or when doing their tax return, see if they can claim it. Sometimes in tax, things are time limited. Yeah. So if somebody's taking a job abroad, they'd be advised to do a little bit of research before they went. Yeah.
Perfect. Okay. We have quite a few actors in the Academy who have leave to remain status. So they're from another country, but they have leave to remain in the UK. How does that affect their taxes?
It doesn't particularly. So leave to remain is a status whereby you can stay in the UK. Yeah. Now, tax residence is based on a number of other things, but primarily it's like, are you mainly in the UK?
Yeah.
It's a really complicated statutory test. Yeah. So if you've got somebody coming in and out of the UK a lot, even if they were a UK citizen, you look to see whether they're UK tax resident based on the statutory residence test, right?
Okay.
That doesn't change for a leave to remain person if they are mainly in the UK, regardless of their born or chosen nationality. Yeah. If they fall within the parameters of the statutory residence test, and the main rule is if you're in the UK for more than 183 days in a tax year,
okay,
you are tax resident in the UK and therefore liable to the tax system in the UK.
Got you. Right. Okay. That makes perfect sense. One thing that a lot of actors do, especially with the expense of living in London, is a lot have cars and they travel into London to go to auditions or to go to work. What can actors claim for when it comes to travel and car expenses? We talked about the 45p per mile.
It is generally 45p a mile. So if you can, either way, if you work for a company, the company can reimburse you that money, or you can put it through your tax return if the company doesn't reimburse you that money. It's generally just the 45 pence a mile. Some people might think about putting a car through a company as a tax deductible cost, unless it is a hyper efficient electric car. Tax on company cars is huge. And I would generally not advise it. So usually you're probably just stuck with 45p a mile on your first 10,000 miles and 25 pence thereafter.
Yeah, and sometimes, of course, that can work out as more than you would have spent on your petrol, but of course covers the wear and tear to your car.
And if they travel in another form, right? So it's not their regular place of work; they're traveling to auditions and that kind of thing. Those costs are tax deductible.
Oh, they are. Okay, that's good. So getting the bus into London or the train into London. Yeah, excellent. Okay, that's good to know. As an actor's agent, one thing I've always spoken to my actors about is whether commission that they pay to an agent is an expense in tax terms. So if I'm doing a job, let's say a TV show for the BBC, my agent charges me 15 to 20% commission. Can I then claim that back as an expense?
Absolutely. That's a wholly, necessarily, exclusively incurred for your business.
Excellent. And does that tie into subscriptions, etc., like paying for your spotlight page or paying for new headshots, these kind of things?
Headshots certainly would. Your spotlight page is there promoting your business, so yes, it would.
Okay.
Yep.
That's good to know.
So I'd say it comes back to, is it necessary for your business? Is it incurred wholly for your business? You wouldn't have a spotlight page just for giggles, I imagine.
No, exactly. No. Not with the cost of them. No, definitely not. Excellent. Okay. How are taxes worked out for actors that are both employed, as most of the 98% of actors are, as in non-acting jobs as well as acting work?
Okay. So employment is taxed at source through the PAYE national insurance system, right? So your employer is required as a matter of law to pay you your salary net of any taxes. Okay. Any self-employed income needs to be returned on your tax return. So when it comes to doing your tax return, you have to return all your income. But what you do is basically you have your employment income. You then add in your self-employed income. That gives you a taxable profit. You calculate the tax and deduct from that the tax already paid over by your employer.
Right. So in the same way as you would an expense, it kind of
exactly
off.
And then so you're only left paying the tax on your self-employed income.
Excellent. Okay, cool.
Now, just on that, your employer may from time to time get the tax wrong. Right? If you're on a continual employment, they often adjust it through next year's tax on your employment, so they might up it a bit.
Right. Okay.
Right. You can make a catch-up payment through your tax return. If it's sufficiently large, they may require you to make a catch-up payment. And this all comes down to what's called a PAYE coding notice. So your PAYE coding notice is all about how much tax-free allowance it's about 12,500.
Of course, it's different. It's different in Scotland, isn't it, from other countries?
So that notice tells you broadly how much an allowance you're allowed to. They will flex and adjust that notice. It's worth they should get those notices, and it's worth people checking their pay slips and their payroll notices to make sure that the correct amount of tax is being deducted.
Yeah. Excellent. Okay, cool. For those actors that are fortunate enough to make a living and potential profit from acting, obviously, as we know, 98% of all actors are out of work at any given time. But what are the best ways that actors can invest money that they have left over? So if they've done the tax return, they've got a nice little bit of profit left over. What kind of investments would you recommend for actors?
Genuinely, I'm not allowed to give any recommendations on investments. I'm prohibited. That said, they can make, so from a tax efficiency point of view, they can make pension contributions, right? So if you're self-employed, a pension contribution will reduce the amount you're taxed on, right? So what happens is the contribution you make goes into your pension. The pension fund claims back the tax on that, the 20% tax on that, as a rule. If you are earning more than 50 odd grand and you're a higher rate taxpayer, you can claim the other 20% back through your tax return on the pension contribution, right?
Yeah.
And in a company, you can get your company to make pension contributions, and it's corporation tax deductible.
Yeah.
Now there are certain limits on that, depending if you'd have to be earning a great deal. So if your total income plus your company pension contribution is more than 260,000, the amount you can put into pension tapers off. But otherwise, most people, I'd say at the moment, most people can put 60 grand a year into their pension.
Yeah.
That way. So that's a tax efficient, but in terms of actual investments, they would genuinely be better speaking to a financial advisor.
Yeah, rather than an accountant. Well, that's been loads and loads of information. That was absolutely brilliant, John. Thank you very much. Lots to sort of mull over there. The last question I had, I think we've already answered about when they should submit their tax returns and when they pay tax. So that's all great. But thank you so much for all the information.
Oh, you're very welcome.
We've dispelled some of the myths that actors sometimes have that they can just claim back anything, any clothes or makeup or anything they buy. But it's good to get those dispelled so that people aren't getting caught out. So thank you very much for joining us, and best of luck with everything.
My pleasure. Thank you.